Welcome back. You're watching Buy or Sell. It's time now to discuss the primary market as well. Ready-made steel is an IPO which is open today. Small size IPO, 34 crores is the total size of the IPO. But to find out what's the business prospects, what's the outlook for the company, we have the management with us. Mr. ANIL AGARWAL, the MD at Ready-made Steel, is joining us now from Mumbai. So thank you so much for joining us. Can you give us a sense, why have you decided to go for an IPO at this point of time? I'm sure there are other attractive opportunities you could have used, probably even the debt markets. What's the rationale for looking at an IPO, particularly for just a smaller sum?
See, as a new concept, we wanted to have a better leverage in a debt equity ratio, so that in case if it has to help us for future expansion plans, this size can help us. We already, before the IPO, our net worth was not too much to take up a project of around 62 crores expansion. So based on this equity infusion, we got a debt sanction by the bank already, and we wanted to be better leveraged for future expansion plans.
Can you give us a sense, your expansion plans, what's the kind of amount you're looking to allocate? What are the total capacities you're looking to set up?
See, out of the total project size of 62 crores, we are raising, total issue size was 41 crores, out of which around 7 crores is already been raised in a pre-IPO placement. Another 34.73 crores will be raising by way of the fresh offer now. Around 15 crores is way of debt, which has been appraised by Union Bank of India, and around 6 crores is out of the internal accruals, which will be invested into setting up capacity at near Raipur, near Delhi, and expanding our existing facility at Khopoli.
Right. Mr. Agarwal, also, how would these improve your overall volumes in the current fiscal?
They'll be more than, in the current fiscal, we will be able to start operations in Khopoli expansion, and maybe towards the end of this fiscal, last quarter would see some volumes in near Delhi and Raipur. So overall, from a 27,000 tons capacity currently, we should be able to be at around 90,000 ton per annum capacity by end of this year.
And Mr. Agarwal, also any additional debt funding that you may be considering for your expansion plans? How would this impact your present debt equity as well? In the near future, there's no further plan to raise debt, because this suffices our capex plan what we already raised from Union Bank of India. But being a new concept, the demand is really huge, so we wanted to be better leveraged. That's the only reason. Currently our debt equity ratio is around 0.7 to 1, and post IPO it will be close to 0.6 to 1.
Your client concentration is only limited to a few marquee customers, and that presents some kind of a risk. What are your plans to deleverage this, or would you plan to expand your client base?
See, as it's a novel concept, our limited clientele is primarily large infrastructure companies who are ready to understand and ready to change into a innovative way for a faster delivery. Most of these are companies which are involved in construction of large towers, rail networks, monorails, bridges. They adapt to a newer technology much faster than a conventional contractor, and that's also one of the reasons why a very few clientele is what we are catering to now, because the concept has to first go to the downstream among the contractors in a much better way. We are seeing good response over the past few months when the capacity is going up, because we had a limited capacity of 27,000 tons, and in 2 years our order book has been full, or going 4 times. Like our current order book is close to 1 lakh tons. So there was hardly any capacity available to service more clientele. But since we are adding capacities, we are seeing good response from other clients as well.
And also the fact that you have a low bargaining power when it comes to your customers, would that continue to remain the same, or do you expect any changes on that with the addition of new customers?
Not really, because if you see the demand supply scenario, since now we can say that in a place of Bombay or Western India, this concept has been accepted well. There is more of demand and less of supply. So we don't see any change in the bargaining position in the coming quarters.
And Mr. Agarwal, also, how's the order book looking at the moment? What are the improvements that you estimate in the current quarters?
We have a current order book of close to 1 lakh metric tons to be delivered in the next 2 years. In terms of, we are seeing a good response from our client, but maybe post listing I would be able to share the data more than now.
Right, you've also recently restated your accounts, right? What was the requirement for it?
No, the ICDR requirement requires you to restate the account by a peer-reviewed auditor, and that was the only reason that it was restated.
Sir, margins also have seen a bit of a decline when it comes to FY10 numbers. Do you expect the situation to continue, or some uptick on the margin front?
There's no particular reason. We were actually established in the year 2010 much better than in the year 2009. To increase the sales, initially the EBITDA margins were low, but I think it ranges around 7 to 8%, and we feel the more the concept will be getting accepted and the volumes will increase, our margins will improve better than what it currently stands.
Your prospectus talks about a pre-IPO placement. Have you already chalked out plans for a pre-IPO? Can you give us a sense of who would be these investors?
We could successfully get a pre-IPO placement of around 6.5 crore of rupees. They are primarily people who are in realty or related industries, who understand the business, who are confident that in a medium to a long term this concept will become a reality in the country, and who are more of a long term player. They understand the market much better than any other investors.
So you've also stated in your prospectus that there could be a conflict of interest of some directors. How do you plan to tackle with this issue?
Primarily, some of the directors are also involved in steel business, though it is a very remote possibility of a conflict of interest, but the requirement was there that it has to be disclosed if it is even in any kind of steel related activity. So we don't foresee any conflict of interest arising in times to come, because it's a totally new segment and new concept altogether. It's not a steel industry. We position ourselves as an infrastructure solution provider.
And very lastly, what is the kind of impact you were expected to see on your performance due to a hike in steel prices?
Frankly, the steel volatility is not affecting our company, because most of it is passed on to the ultimate client, who is a contractor or a developer. Our orders are booked most on capacity allocations, and on a month-to-month basis, the prevailing steel prices are passed on a base price model to the clients.
All right, Mr.
So
Agarwal.
we are pretty much safe in that manner.
All right, sir. Thank you so much for joining us. Good luck with your IPO plans. We take a break now. We'll come.